Many of you have asked me about my opinion on 3M stock as it's now sitting at $102 per share. It has been going up recently, and I've seen many people on Twitter, a lot of dividend investors claim that the worst is behind 3M, and now 3M is going to recover, and it's an amazing dividend stock to buy for the long term for many dividend investors. Even some value investors really like 3M over here. And I have to admit, I've done a few videos on 3M. I've been pretty bearish on the company, but a lot of things have changed, not just in the stock price, but within a lot of the lawsuits they had, within their own guidance, their healthcare spinoff, and many other things. I'm going to discuss all of them in the video. And most importantly, I'm going to do a deep analysis on the dividend safety and make sure that the dividend of 3M is safe. It's not a yield trap, and it's likely not going to be cut, or maybe it's going to be cut. I'm going to give you all of that here in today's video. Now, to get started with the recent guidance, it's been very encouraging. They raised EPS and free cash flow guidance for 2023. This is the second time they raised free cash flow guidance. This is very encouraging for a company like 3M with bad sentiment. The stock has responded well to such news, and things feel that they are starting to move into the right direction, and maybe people are right, and the worst is behind 3M. They did have the earplugs lawsuit, which I did cover. There were estimates that it could cost up to $80 billion. Well, it wasn't $80 billion, it was only $6 billion, which is still a lot of money. And 3M has to pay this money, I believe, to the veterans that were within the lawsuit for the earplugs. Pretty bad stuff. But this is what happened, and over $6 billion are going to have to be paid. They faced a second lawsuit, which was the PFAS settlement. It was something within, some kind of contaminated waters or sewer or whatever it was. But it was also something pretty bad within chemicals, not just in the United States, but in many places in Europe. And I believe there's still a trial in December to determine the exact amount or something in Europe. I'm not really sure. But for now, it's over $10.3 billion that's going to have to be paid over the next 12 years. So this is pretty massive for 3M. But these two lawsuits were causing a lot of uncertainties to the stock because people didn't know how much 3M is liable for. But now we do know some type of information of how much they could possibly pay. And this is where I can base my numbers off, and we can use them to determine if the dividend is actually safe or if it's maybe, some kind of a value trap. Now, as I said about the PFAS lawsuit, PFAS is not going to be all paid within the same exact year. They're going to have to make payments on it, something around $2.8 billion in 2024, something like $1.7 billion in 2025, $440 million in 2026, $1.7 billion in 2028, and it goes on and on and on, all the way up to 2036. So there's a lot of pay, over $10.5 billion, and it could be a little bit more. We're going to know in December. But this is the numbers that I have. This is pretty much the long-term debt for 3M, the debt maturities. They have 1.1 in 2024, in 2025, 1.8. This is pretty much the long-term debt for 3M, excluding what they have to pay for the PFAS settlement. Now, I included the PFAS here to determine what is their yearly debt that's likely due for 3M, and I added $2.8 billion for 2024, 1.8 in 2025, etc. You could see it here in the graph. So in total, this is the numbers that I pretty much got. I got around $3.9 billion worth of debt maturing in 2024, 3.6 maturing in 2025, and 1.8 maturing in 2026. Now we have to look at how much 3M is actually paying in dividends. 3M pays around $3.3 billion every single year in dividends. So I also added the dividends to this calculation. It's pretty interesting. So I added the $3.3 billion in dividend for the next 2 years. I got $7.2 billion that 3M has to pay in 2024, $6.9 billion that 3M has to pay in 2025. And if we look at the free cash flow of 3M, the expectations, it has been improving, and I would not bet on it to improve anything beyond that. But for 2024 is $4.2 billion to $4.7 billion. So let's take $4.5 billion on average. If they do make $4.5 billion of free cash flow, that's not enough to cover $7.2 billion in 2024 or $6.9 billion in 2025 or even what they have in 2027 and beyond. $4.5 billion of free cash flow is not enough for them to cover their debt obligations, the dividend, and the settlement, which would lead me to believe that this amazing dividend that people are buying, the 6% dividend, is at a very high risk of potentially being cut with something like 3M. And I've seen no one pretty much talk about this. Everyone talks about how the dividend is safe and everything. But I've seen very few people, almost no one, actually calculates not just the long-term maturities, but also includes the dividend obligation and also includes the PFAS lawsuit settlement, which can end up being much, much higher. But so far, 10.3 billion, this is the numbers. And with 4.5 billion of free cash flow, the numbers don't make sense, which would lead me to believe that the dividend has a high likelihood of being cut. It's not guaranteed. There could be one simple thing that could save the dividend, and I'm going to tell you exactly why. But if I was buying 3M and I was a dividend investor, I would not buy it. I'm just being honest. The dividend is not worth it. I think it's very, very risky. There's other kind of dividend stocks offering 6, 7, 8%. A lot of REITs, like Realty Income is offering 6%. Realty Income is dividend is not going to be cut. 3M has a much higher risk as a dividend company. I mean, I don't know why we would buy 3M for the dividend. It's extremely risky, and I showed you why it's so risky here in the video. But there's one simple thing that could actually save 3M. And this is the spin-off of the healthcare division of 3M. They're going to name it something like Solventum, which is Solve and Momentum. I read about it. They're going to sell off 80% of the healthcare division, which means they're going to retain around 20% of the company. Now, no one knows how much this company is going to be valued at in the public markets, but so far in 2022, they made $8.4 billion of sales. The healthcare division is the most profitable segment of 3M. In terms of operating income, it's the most profitable. So they're going to lose 80% of the most profitable segment in the business. But I'm not sure where it could potentially trade at. But if it trades at something like 1x sales or even 2x sales, I mean, I could see 3M raising between $6 billion to $10 billion. Now, if 3M does raise, something like $10 billion and this one gets valued at something like, 2x sales or 1.5x sales, they could raise around 10 billion. So if they do get 10 billion, then they can, pretty much take care of the PFAS lawsuit, and then they won't have all these kind of crazy obligations, and then the dividend will be saved. But you have to keep in mind that if they lose 80% of healthcare, their free cash flow is going to be much, much lower than what we looked at in terms of 4.5 billion. So even then, I'm not sure if the free cash flow is going to be enough to cover the dividend and for 3M to do any kind of buybacks or any kind of debt pay down or even reinvest into itself. So I'm just being honest here. I know a lot of you love 3M. You think it's the best company ever. I get it. I've seen a lot of comments. But to me, it's not worth the risk reward. I mean, there's so many things going on. If you're dividend investors, there's so many better dividend stocks, even though they rallied a little bit. There's many better dividend stocks. If you're a value investor, there's still much better value opportunities than something like 3M. So, I mean, I see the opportunity. I see that it makes sense to most people. But to me, there's a lot of things going in and out. Now, of course, I could be wrong if 3M, the healthcare division got valued in the public market at a crazy level, like 20 or 30 billion, and they raised like 15 or 16 billion, and they solved all their problems. But this is like betting on the lottery for me, and I don't play lottery too much. And I'm just being honest. I mean, I'm not seeing this opportunity with 3M. I think the dividend is at a very high risk of being cut. If I was a dividend investor, I would look elsewhere. There's way better opportunities with 5 to 6% dividend yields, a lot in REITs, maybe even some utility stocks. I mean, they're not the best, but I mean, I would buy a utility stock over 3M. I'm just being honest. So yeah, this is my take on 3M. I'm still a little bit bearish on the company. It doesn't mean it can't recover and go to 150, but just looking at the risk-reward scenario within 3M, I'm not personally seeing it. I think there's better value in the market. And this was my honest opinion on the company. It was not financial advice. So I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.